Good afternoon, real estate agents. It is November 28th, and this is our Thriving Agent webinar series. This month, I want to start off with something that came up at a program I did for one of the brokerage firms last week. And the way the person introduced me, Eric Zimmerman, he started off by talking about the Ninja Sales Tools book and running a business on purpose, and by extension, living your life on purpose. And the way I related that to what we do from a tax planning standpoint is that most people take their income taxes as they come. Take your income minus some expenses, pay your tax. Or if you're an employee, you get your W-2 and you may itemize your deductions or you may not. And you essentially take your withholdings against your tax and get your refund and move on. It doesn't have to be that way. And essentially that's what causes many Americans to overpay their taxes. So our goal and our standpoint is that you can proactively impact your tax liability. In other words, you can pay less as long as you arrange your affairs and arrange your business activities in the way that is most tax efficient. And we do that through tax planning. Tax planning allows us to engage in a business or arrange a transaction in a way that's the most tax efficient and tax effective for the parties involved, or at least the parties that we represent. That means that if you are in business for yourself, we want to look at what's going on in your life. And based on that, maybe we want to, as I said in this particular program, set up a medical expense reimbursement plan so that you can deduct all of your out-of-pocket medical costs. Now, I'm not just talking about the health insurance. You can already deduct that as a self-employed person. But what I mean is the co-pays and the deductibles and the prescriptions, the eyeglasses, the contacts, the various other things that you may pay out of pocket. It may be possible to arrange your affairs in a way that you can deduct those as a business expense. But that may not be the right strategy for you and for your situation. It may be more appropriate and more beneficial to change the business entity under which you operate. Whether by default you may be operating as a sole proprietor or a single member LLC, but maybe a corporate structure, or maybe an S corporation structure, or maybe one of each in your stable of entities would be most beneficial. That's something that can only be determined through the tax planning process, where we look at what's going on in your life so that we can help you put into place the strategies that are going to save you the most money. Now, not all strategies will apply to every situation. And unfortunately, that's sometimes the leap or the jump that is sometimes taken, is that we hear someone is doing something and we think, well, they're doing it, so I should do it. And that might actually be more costly than beneficial, because the reason they may be doing something may not exist in your situation. So in the case of for example, the medical expense reimbursement plan, in the case where the taxpayers may have a child with special needs, so their medical costs are significant. So having a business structure that supports that in a way that allows them to create a scenario where they can deduct their medical expenses as a business expense, then it would apply to their situation. Maybe an S corporation would cost them money because they can't set up a medical expense reimbursement plan under that structure. So what we want to do is make sure that the strategies that are considered and certainly put into place are effective and the right strategies for any given business, whether it's a real estate agent, a manufacturer sales rep, or someone who sells a product. And that can only be determined through a tax plan. We need to evaluate all the criteria that are going on in your life to make that determination. I've got a client who seems to think we're meeting today, but that's not the case. Let me try and take care of him while I'm speaking to you. The living on purpose, designing your business on purpose takes time, takes effort. What I'm seeing in many cases is that business owners, real estate agents, whatever it might be, are not doing things on purpose. They are taking them as they come rather than purposely attempting to increase sales, whether to purposely reduce overhead or whether to purposely market to a niche in which they think they might be able to help or benefit themselves. Doing things on purpose takes time, takes effort, takes planning, takes intention. You have to be intentional about your business rather than just simply taking it as it comes. So one of the questions that I received from an attendee at the program was they'd been let go from their job and they became an agent. They're saying that they're claiming unemployed. I think what they mean is that they may be receiving some unemployment benefits. Unemployment benefits are taxable just as any other sort of income. It's not subject to self-employment tax, but it is still taxable. As a new agent, they are a business owner, just as all of you are, which means that they've opened up the entire tax code to themselves rather than just those sections of the code that apply to employees. So it means that they can consider all of the various business deductions that are available to them. Now, I get the question a lot, what can I deduct? Well, generally and primarily, you can deduct anything that is ordinary and necessarily needed in your business. Marketing, advertising, E&O coverage, medical expense reimbursement plan, if it fits. Any business expense that applies to their situation. And I'm going to put you on pause for a second for my audio. I'll be right back. Sorry about that. Client thought we were meeting. He got the webinar invite and thought it was a scheduled meeting with him, not the webinar. A little bit of confusion there. If you have questions, go ahead and send them through the chat. I'd be happy to attempt to answer any questions you may have. We're saying no audio. That's not good. Well, it may be. Do you have audio now? It may have been because I muted it for a second there. There we go. Okay, so we have audio. I had to mute it for a second there. A client got the webinar reminder and thought we had a meeting scheduled today, so I had to take care of that real quick. I apologize. The topic today was living intentionally, running your business intentionally, with intent, with purpose, and how that applies to tax planning. And in my opinion, they're one and the same. Tax planning is about it intentionally affecting your tax liability, intentionally attempting to find the ways to rearrange your activities to be the most tax beneficial. Now, and the various things that may or may not apply. Now, what I started to talk about was what's ordinary and necessary for business. What can I deduct? The first thing you need to do is track the things that you spend money on, especially through your business. Your business should have a separate bank account. All of your business activities should be paid through that bank account. All your revenue should go through that bank account. What's revenue? Well, that's your commissions. That's what you receive from the sale of the properties. All of your business expenses should go through that account, whether you're operating as a single sole proprietor or a single member LLC or a corporation or an S corporation. That having all of that data go through that account allows us as the preparer to then sift through it and apply the various filters that may apply to that particular expense and determine how it should be categorized. Is it a business expense? Is it a personal expense? Is it limited? For example, meals. Meals are still deductible, but still limited to 50% once we do your return. You still pay for 100% of it through your business account. We should probably talk about that. Entertainment costs are no longer deductible. What does that mean? Well, it means you can't pay for the Bengals tickets or the Reds tickets or the Cyclones tickets. Cyclones, right? Or Playhouse in the Park or concert tickets to the Aronoff, because they're no longer deductible. You can still pay for them through the business, but when the tax return is done, they're going to either be treated as a non-deductible item or treated as an owner distribution, as if you paid for it personally. Thereby, effectively, you're paying tax on those costs. Now, I say you can still pay for them through the company, but you have to determine whether or not there's a return on that investment, right? So you're going to pay tax on the Reds tickets, but maybe paying for those Reds tickets and giving them to your clients or your prospects brings in a significant amount of revenue for you. So it may still be worth paying for those out of your business. That's something that as a business owner, you should be able to decide. Other expenses that you may run through as ordinary and necessary. Insurance, business auto expenses, probably mileage, business travel. If you travel for continuing education or for your broker maybe, or to look at property. You can combine those trips with some personal opportunities if you travel. If you're going to a real estate agent conference in Orlando or something like that, you could take a day and go to do something personal. As long as the primary purpose of the trip is business, that fits in. Or extend the stay by a day to do some personal things. The personal portion wouldn't be deductible, but your travel probably would be, because if it's primarily for business, there you go. Thanks. You like the tie, huh? Very good. It's been a busy couple of days. I've had ties on 2 days in a row. It's kind of uncharacteristic lately. Do you have any questions today? Would you like to come on as a presenter? I'm not getting a response. He may be ignoring me. Let's see if I can prompt him. Let's see if Mr. Rosignol, the rock and roll real estate agent, will join us again. I talked to Eric Zimmerman. He introduced me to the group of agents that I spoke with last week, and I think Eric's going to be on as a guest at the end of January. So the last Wednesday in January of 2019, see if I can get a date for you, is when we'll have Eric on. It's going to be the 30th of January, 2019. And Eric is a ninja selling certified instructor. And he teaches the ninja selling content to agents all across the country. He indicated that he's going to be traveling several times in the next several months to various brokers to teach their agents. He's also going to the headquarters of Ninja Selling to get recertified and re-updated. So he's kind of heading to the mothership. All right. I don't have any other specific questions coming in, so we may call this a day. I received various questionnaires that I hand out at the seminars, and nobody had questions that they wanted me to cover. They wanted copies of our slides and a copy of our commission allocation spreadsheet. If you'd like a copy of that, send me an email or send me a chat, and we will get that out to you. The commission spreadsheet essentially allows an agent to determine what portion of their commission should be